Good afternoon, everyone. My name is Ophir. I'm a second-year MBA at MIT Sloan. It's my pleasure to introduce our panel, Investing in Sports Around the Game, from Teams to Tech. Our panelists today are George Pine, founder and CEO of Bruin Capital, Carolyn Trish Blodgett, CEO and founder of Next3, Mitch Lasky, partner at Benchmark and co-owner of LAFC. Our panel will be moderated by Steve Heiner from Andalusian Private Capital and Andalusian Sports Advisors. The panel will run for 40 minutes, and we will leave 5 minutes at the end for questions. Please submit questions via our Cadence app. With that, I'll turn it to you, Steve.
Great. Thank you, Ophir. Thank you, everybody, for joining us. Excited to be here. Great topic. Really distinguished group of panelists as well. So I think before we get into the content, it'd be useful just to hear a little bit more about each of your backgrounds, where you've been in your career and what you're doing now, what firm and your focus area. So George, kick it off with you.
All right, George Pine. I was 11 years at NASCAR, where I was chief operating officer and board member. I was president of IMG for 9 years, and then in 2015, went out and raised my own investment fund. And over the last 10 years, we've bought 45 companies, put them into 12 companies, and have had 4 successful exits. We've raised over $1.2, $1.3 billion. In Bruin, the companies, we have 8 companies today. They operate in 24 countries on every continent except for Antarctica, and we work with every major league or federation in the world. And I would describe what those companies do are the picks and shovels. So people who invest in teams and leagues, they're the gold miners, and we're the people that provide the tools to the gold miners.
Great. Carolyn?
I'm Carolyn Tish Blodgett. I am the CEO and founder of Next3. I'm the governor of Gotham FC, the women's soccer team in New York, and I'm an advisor to the New York Giants, which my family co-owns. So I kind of split my time a third between those 3. So I started Next3 about 3 years ago after my background in operating. So I used to work at Pepsi in marketing, and then I ran marketing at Peloton for 4 years, and the kind of formative years of Peloton. And then when I left, I started working with my family at the New York Giants, which our families co-owned for the last 30 years, and realized there was an opportunity for us as kind of legacy owners in a league like the NFL to take our expertise and take our experience as co-owners and bring that to what the future of sports looks like. So now I operate this firm on behalf of my family called Next3, and one of our signature deals that we've done, which I'm sure we'll talk about later, is Gotham FC, the women's soccer team that I now lead.
Cool. I'm Mitch Lasky. I am a partner at Benchmark, which is a venture capital firm in the Valley. Silicon Valley. I started my career in the video game business and spent 20 years publishing video games, ran the studios at Activision, ran mobile and online at Electronic Arts, and had the first startup to go public, the first mobile game startup to go public on NASDAQ. I then transitioned to the venture investing world, and for 15 years worked investing in mostly consumer stuff, mostly games and entertainment-related products. Looked at a lot of sports stuff, didn't do a lot of sports stuff. Got interested in sports analytics, started coming to Sloan. This is, I think, the 13th year that I've come to Sloan. Mostly, I just came as a fan and sat in the audience and soaked it up, but got really interested in soccer analytics and tried to buy a team in England and run it as an analytics project. Got outbid by a Chinese cement company and ended up buying into the Los Angeles Football Club with some friends of mine who were buying the franchise back after Chivas USA had failed in Los Angeles, and the league had decided that they were going to relaunch another team in the city, and so have been working now for the last 8 years on LAFC.
So a very diverse group of panelists, which is great, now converging in the world of sports investing. It'd be really interesting to hear from each of you why sports, as an asset class. There's a lot of buzz about valuations and different types of investments that are being made across the ecosystem. So I'd love to hear each of your perspectives on why sports is special in your respective focus areas within the broader kind of umbrella of sport. George, why don't you kick it off?
First, we switch it up, but anyway, just kidding. What makes sports special? I think when you look at asset classes, there are very few asset classes that have grown for 30 years at a double-digit rate. And so that's made it highly valuable. Why is that? Well, there's a scarcity of asset. There are only so many teams and clubs at a high level. And also, in a world of fragmentation where media and content is being fragmented, there are very few things that bring people together in large numbers, tens of millions, hundreds of millions, and in the case of soccer, billions of people together around something that they have a passion for. So as the world fragments, the one great unifier is sports, and that's why it's really held its value. The last thing I would just say is that when you go through economic downturns, sports is very resilient as well. So grown for 30 years, highly resilient, and well-positioned for the change in the way content is distributed.
Yeah, I would add to something that George said about sports bringing people together. Sports are the ultimate connector. They're, if you're on a plane sitting next to someone and you think you have nothing in common with them, you start talking about the basketball game last night, or you're sitting around the Thanksgiving table, or you're thinking about who the next Giants quarterback could be. Your sports are the thing that will bring people together. And if you think about, investors spend day in, day out in other asset classes all day thinking about what products create community. What are the products out there that will bring people together? We very much saw that at Peloton. That was yes, we had a great product at Peloton. The reason investors were excited by investing in Peloton is because it was something that brought people together, and that's what sports do. And that's why we're so excited about the investment opportunities.
Yeah, and I'll echo both of those. I agree with both of those sentiments. I think in addition, it's really hard in the modern era to find things that can actually generate these sort of scalable and at the same time durable audiences. And sports has a really unique sort of a role in doing that in culture. And so I think for that reason, I think it's very interesting as an investment because, again, replicating that in other media and other entertainment categories is extraordinarily hard and extraordinarily expensive.
So Mitch, lessons learned from your experience in the gaming space, the technology space, now as an investor in sports, what are kind of lessons learned from those different sectors where you have experience, and how do you apply them in the world of sport?
Yeah, I think we obviously in the video game space, the audiences are extraordinarily fickle, and their substitution choices are immense. There's constantly, there's 13,000, 14,000 games that are getting published in any one year, and so your competition is really dramatic and ruthless. And so I think what we learned about the exclusivity of sports that George just spoke to earlier, about the idea that they are really precious assets. It's almost like the art market in the sense that there's only one Los Angeles football club. There's not going to be another one. And so the fact that there's like 30 teams in our league, there's whatever number of teams in each of these other leagues, they have a certain scarcity that I think is appealing to having come from some of these businesses where scarcity isn't really present. In terms of that ability to create these audiences, to serve these communities, and to do it over time without the kind of churn that we're used to in the customary media businesses.
Great. And Carolyn, your experience at Peloton, corporate experience, branding, marketing. We'll talk a little bit later about the importance of storytelling in sport, but what else from your experience at Peloton and kind of the corporate world, now that you're building out your sports investing business, what are some things that you have brought from that world into your current focus?
Yes, so I would say the way that I guess two things. First is when I think about, what makes us a unique investor today, I really think about the two things that have defined me, which is number one, our family's, legacy in the NFL, and number two, my operating experience at places like Pepsi and Peloton. And so when we're looking at new investments, and now I would say we have this unique opportunity that we are both operating businesses today in the Giants, in Gotham, and we are investing. So there is this kind of magical flywheel effect happening where when we're looking at a new investment, we know day in, day out from operating the businesses what would resonate with the team. We know the things that technology would greatly fix that we're struggling with today. On the flip side, when we're operating, we have a front row seat to all of the cutting edge investments that are happening. So at the Giants, a few years ago, the marketing team said, we don't have a text messaging platform. We have no way to kind of interact. SMS is growing. We need to be able to communicate with our fans. We had happened to be looking at a text messaging platform from an investment perspective. And so we have this ability, on both sides to be better at what we do because of our other roles.
Great. And lastly, George, your experience at IMG, NASCAR, you've been an operator of leagues, of agencies. So how do you, when you go out and meet companies in the space, how do you bring that perspective of actually operating in the sports world to now investing in the sports world?
Yeah, I agree with Carolyn. Yeah, I have a better, I think I have a feel for what might work and might not work in a way that somebody else that isn't in the industry and is just a pure investor would not. So like when I look back at On Location, I really saw a small company that I thought could be a lot more. When we invested in Delta Tray, did I think streaming, webs, apps, and streaming was going to take off? I did, right? I kind of felt it. When you look in our current portfolio, TGL, we empower, we're the technology behind the TGL with a company called Full Swing. Do I think that technology someday, when you and I play each other in your garage versus mine, and you're going to be able to bet on that, do I think that's the future? I do. Or do you have a company that does virtual signage? So I think coming from the industry and spending 30 years in the industry does give me an advantage as an investor. I have other disadvantages, right? I'm not a finance person, so I'm 59 years old. I wake up every day. I learn something new every day. It's quite frustrating, but I do have an advantage in terms of the operational side because I grew up in the business.
That's great. Media rights, big topic as a sports investor, big piece of the revenue pie for sports teams and leagues and the services businesses around. So I guess, Mitch, starting with you, clearly in a period of high demand for premium sports IP, technology companies increasingly spending, media companies in need of premium IP for their business model. So, but also in a period of transition to streaming and to direct to consumer. So your experience in the gaming world, your experience with technology, what's your perspective on the long-term model for?
Yeah, I've been on both sides of this. In the games business, I was obviously a licensor, right? So working at Electronic Arts, and before that in my startup, which where we had some sports licenses, we've certainly seen sort of how those have appreciated over time. I mean, when we were buying NFL rights in the early 2000s, they were essentially free. I mean, compared to what they are now. And the most recent Electronic Arts deal that was cut just after I left, I think they're paying something like $30 million or $300 million a year to the NFL for the rights to do Madden, right? Which is, orders of magnitude greater than they used to be. So I think that the leagues have figured out the value of this. I think FIFA always kind of understood their value and had always extracted taxes from pretty much everybody, advertisers, sponsors along the way. But I think some of the other major leagues have started to figure that out as well. So I think that's been an area that's really become a sport of kings for the licensors. I think on the other side, now obviously I think these folks can speak to it probably more eloquently than me. The media deal for Major League Soccer, it doesn't even really compare to a weekend of what many of the other major sports are able to garner. We're really dependent on sort of game day revenue, very, very much uniquely. And that creates a completely sort of different approach in terms of sort of managing the fan experience, trying to figure out interesting alternative revenue opportunities, because we can't rely on media in the way that most of the other major sports can.
George, Caroline, anything you want to add to that?
Yeah, I'm glad you started actually in the digital side, because to me, media is about how you consume the product, and obviously that's changing. So if you think about, MLS now is very local. Think about, the NFL or any of the major properties 20 or 40 years ago, it was all about your physical location. You drove up to the stadium, you walked through the turnstile, you sat in your seat. That was the only way. If you're a Giants fan, it's because you lived in New York and you could hopefully go to a game. Now you can wake up in Germany on a Monday morning and open your phone and watch. You might not even follow the Giants. You might just follow Malik Neighbors and you see the highlights from the night before. And so fandom is really shifting from this physical, local opportunity to a digital, global opportunity. And so the media rights will follow that, but I think they'll look very different based on that.
I'd add, too, we're in 24 countries, so when you look at Europe right now, it's pretty challenged, right? Because you have fewer broadcasters, they can't do longer-term deals. And so if you look at what's going on in French football, it's really challenging, and that's a generous description. When you look at Italy, it's very challenging. And even the UK, domestic rights for the EPL are flat, right? So you have a very difficult market in Europe. In the US, much more robust. The NFL is separating itself, which is remarkable. The NBA just did a $75 billion deal, really strong. So you really haven't seen any real cracks. I guess Major League Baseball going off ESPN is something everyone's going to have to watch. But still, in the U.S., sports is held up pretty strong. And just following up, agreeing on the digital, where the future is going that's untapped is the notion of a lifetime value of a consumer, which really in sports, no one really is maximizing yet. And so the one-to-one relationship that I can have if I'm the New York Giants with that fan, and I'm going to be able to provide them content and information, I'm going to know what they like and they don't like, and I can become a more critical part of that person's life. That is an untapped upside of what I'd say is the new frontier in sports as you transition from old linear television to more digital and streaming television.
One of the other exciting things is storytelling around the personalities and the individuals that are on the field or on the ice. And personalities have been brought to life really through some of the documentaries, Drive to Survive, those types of platforms, as well as social media. And between the three of you, each of you bring really interesting perspective on that. Carolyn, starting with you, obviously you talk a lot about this in relation to women's sports and making sure female athletes have the right platforms and are getting the right amount of face time with fans to build the brand and to build interest in the sport. So can you talk a little bit about how you go about promoting personalities in the female athletes that you work with?
I'm so glad you asked this question. So there's a docuseries right now. It just started streaming last night on Amazon Prime. It's called For the Win, and it follows 4 NWSL teams, Gotham being one of them, in the playoff hunt of last year. And I guess a few things. One is, to your point on when they were creating this, it was really important for the people that created it to tell the stories of these players in the same way that they would tell it in the men's game. Obviously, Drive to Survive being the best example of that, but they're doing the same thing now on the women's side. What we're seeing is, as you said, storytelling is why it's why you care. It's why you show up to games. So our season, which you'll see if you watch the documentary, ended in the semifinals and penalty kicks, which was, a gut-wrenching way to have your season end. When you watch the documentary, it is even more gut-wrenching because you start to understand the stories behind it. You see what the players put on the line. You see, who was potentially upset that they weren't starting and who was. And so the stories are the reason that sports is so compelling and the reason that people connect to sports so much. So you're now seeing that very much playing out for women's sports. Interestingly, female athletes have higher engagement rates than male athletes do on social media. So as you think about the opportunity for women's sports to continue to grow and knowing that social and storytelling is such a part of why they will grow, the idea that female athletes do perform better and have higher engagement rates is very much will be a key to women's sports growing in the future.
Great, then maybe Mitch, you next around your experience specifically on the soccer side.
Yeah, we had cameras in the locker room for our launch of our club when we were a new franchise 8 years ago and did a sort of 8 or 10 part series called We Are LAFC, where we led them into the locker room and filmed sort of everything that was going on in the background, the sports science, the poor players having to pee in cups to test their hydration, et cetera. And it was all documented. And I think it went a long way of kind of personalizing the team and the community and for the fan base. But I think across all sports these days, we're seeing in this era of player empowerment and I would say almost a diminishment of the narrative value of team, not necessarily the economic value of team, but the narrative value of team vis-a-vis the narrative value of the players themselves. And I think it's kind of interesting across sports how the younger generation is more attracted to the player and follows the player team to team almost in many cases, rather than, has that kind of, Silver Linings Playbook affiliation to the Eagles, for example, that maybe their parents might have had.
Yep. And then George, you're an investor in a business.
Right,
focused on this,
Box to Box that does Drive to Survive and many other storytelling shows. But I think what's striking to me is when you think about Ronaldo and Messi with 500 million social media followers, the opportunities for athletes today are so much different than they were 5 or 10 years ago. They are their own network. The people I marvel at financially, are the Mannings that own Omaha Productions, valued at $400 or $500 million. I mean, think about 20 years ago, the idea that 2 former quarterbacks would create a company that might have a media value of $400 or $500 million, eclipsing what they made when they were playing the game. And so it's a whole new world out there because of the one-to-one relationship with the consumer, social, digital media, and it's an exciting time for entrepreneurs.
Part of your thesis for Box to Box and your other investments has been international growth and the globalization of sport. Clearly relevant for media rights. It'll be important for the NFL. It's important for the EPL. And so as you think about investing in the world of sport, why is international growth so important, and what do you think has the most promise for globalization?
Well, I think the technology now you can watch an MLS game, you can see any person in the world in any territory in the world at any given time. So that has really is a game changer, literally. And of course, that opens up new opportunities for leagues and teams and so forth and so on. And, sports is a big thing everywhere. Different territories, if you're in Germany, the top 3 sports are football, handball's big. If you're in India, cricket's big. If you're in the US, you get the 4 major sports. So sports is a part of culture, and it's now being digested in many different ways. For us, accidentally, because I had worked at IMG for 9 years and ran a company that was in 30 countries, we've been able to open up markets for these later stage technology companies and create a lot of value for them. And so, sports is being consumed in all different countries in different ways, and it is very, very international.
Mitch, your experience in the gaming world where you have intellectual property that you need to scale globally, what lessons from gaming can you apply to how you adapt content to what has historically been a local business? Sport is a local business, but increasingly.
Yeah, no, and I think a couple of things. One, I was the first institutional investor in Riot Games, which did this thing called League of Legends, which ended up being one of the most successful games. I think they would argue the most successful game of all time. And so we saw that really take off in some very unusual markets that had historically been kind of impervious to the video game business, or had been thought of as marginal backwaters, such as Southeast Asia, for example. And we did ridiculous business. We actually found a local distributor who was willing to take us into kind of internet cafes in Vietnam and Indonesia and places like that, in Malaysia, and ultimately, that company became, it was called Garena, it became CLTD, and today is a $30 billion company. And so the amount of value that's been generated around the penetration of games into these developing markets is extraordinary. And we followed the players in a lot of ways. We tried to innovate on the esports component of the game and try and build local presences around teams and build some kind of international rivalry around it. And the worlds, as they call them in the League of Legends business, which are held all around, but I mean, they'll draw 15,000, 20,000 people to the Staples Center for the final. And they're watched typically by 100 million plus people. And there are $150, $200 million revenue opportunities for Riot selling skins and other kinds of cosmetics related to the teams that are playing in those finals. And the teams come and compete from Korea and China. And if a Chinese team wins, it's usually just a boondoggle for the company because of the follow-on sales that follow from that. And that feels a lot like sports, right, in many ways. But we have the amazing opportunity that we not only own the league, but we own we own the sport itself, right? The NBA doesn't own basketball. But in the gaming context, you can own both the competitive league and the underlying IP.
Very interesting. Carolyn, for you, your investment in emerging sports leagues, specifically TGL, obviously a lot of focus on new leagues and kind of creating new forms of content similar to esports and gaming. I'm curious your perspective on what separates the most promising new ventures in sport, whether it be leagues or technologies versus everything else that's out there.
There are so many new emerging leagues. So the three things we look at when we're looking at an emerging league and why we were so excited about investing in TGL, very early on, is first, do the best players in that sport want to play there? The way that you create the best league in the world is you have the best players, to your point before. Yeah. Two, is there an ability for fans to access it? What is the media proposition? Will a broad array of people be able to access the content? And will content come out of it? And then the third, and this is where, again, I kind of sit with my operator Peloton marketing hat on, is does it fill a real consumer need? Like, is there going to be product market fit if the product hasn't launched yet? And so with TGL, we saw, the first question of do the best players in the world want to play here? Yes. Oh, and sorry, the fourth thing I would add is, is the founder the right founder to lead this? And so first on the first question of do the best players want to play here? Yes. Rory McIlroy and Tiger Woods were two of the co-founders, and obviously brought in a lot of other, high-name players. The second piece on content, the league actually started with a deal with ESPN, so there was guaranteed content. There was going to be broad distribution. The third question on product market fit, golf, the participation in golf has risen pretty steadily over the years, both outdoor and indoor with simulations. And the media product, I hope this doesn't offend anyone in the room, but the media product's just not great. Terrible. I'm not a huge golf fan, but the idea of watching 4 hours over multiple days and maybe you'll find out who wins at the end it's not a great product. So there was clearly a need for a new product. And then the fourth piece I'd say on the founders, Mike McCarley I think spoke earlier, but if you think about who should lead the next new product in golf, the person who used to run golf at the old version of golf at NBC is probably the right person to be leading that.
It's really interesting. I think you could. There's another example of this that I think is exactly what she's talking about, which is the Indian Premier League in cricket, for example, where they took a sport kind of that had the same kind of orthodoxy that golf had, where it's like, oh, we have to be very quiet and we have to be so reverent of the having cameras at each of the holes of the Masters or whatever. And they basically innovated on the underlying product and turned what's a typical 2-day cricket match into a 2-hour cricket match that was totally suitable for television, that you could chop up and show on YouTube. And it's been wildly popular in a country that's crazy about the sport, but was willing to find a new way to consume it. I've spent a lot of time in India, and I've been on trains that stopped in the middle of the desert, and I go to the conductor and ask them why, and they're like, "Oh, there's good reception here to hear the India-Pakistan Test match." And so, you capturing that spirit in an innovative package that's capable of media consumption was really genius.
Yep. George, maybe starting with you, do any of you worry about the sustainability of just the volume of new content that is out there? Consumers flooded with options, social media, streaming, and a lot of new content as well, new leagues and existing leagues. And so at what point do you reach saturation? Do you have any worries about the sustainability of all the new up-and-coming properties?
There'll always be up-and-coming properties, and I can't sit here as a grumpy old man and say it'll never happen. The one I use is UFC, right? Didn't exist 20 years ago. It's doing pretty good, right? So it can happen. There's a great example of somebody that came out of nowhere. So I think, the cream will rise to the top, others will fall off. I think sports is really well positioned, particularly when you think about artificial intelligence, which does have the potential to commoditize entertainment programming further, right? If you consume entertainment programming, what's special about it? It's not so special. It's everywhere. You can get as much as you want. Sports is live, right? And you have winners and losers. You have underdogs and champions. You have people to root for, people to root against. And it's dynamic and it's always changing. So I think sports in the future, I think it's going to get better for that reason. I think other forms of content will continue to be commoditized, And believe me, sports would commoditize itself if it can't, but it can't because it's live and you can't recreate it. So I feel I'm pretty bullish about the future of sports. And again, when you think about top programming, or you look at things, if you look at an NFL game on Peacock, I mean, no offense to Peacock, but what is Peacock? They can get 24 million people for an NFL game. There aren't a lot of things that can do that. So I think sports, because of the fragmentation and because of the nature of the way it's organized, I think has a pretty good future.
Mitch, Caroline, anything to add or disagree?
No, I agree. I think I hadn't really thought of it that way, but I think that's spot on.
Okay. On women's sports and on soccer, Mitch, would love to get your perspective. You're an investor in the MLS. Caroline, you're an investor in NWSL. From an investor perspective, there's the question of growth plus profitability. And there are high growth leagues where you're investing, and then there are more mature leagues that have slower growth, profitability, or path to profitability. So as a technology investor, traditional metrics that you look for in an investment, when you then think about what I've just said about growth and profitability when you're investing in teams, run through just your calculus on deploying capital.
It's odd. I mean, the joke in soccer is that that America has a socialist system of sort of soccer, of managing the soccer league, where there's parity and redistribution and a lot of sharing. And Europe has a complete free market in a bunch of socialist countries, and so it is a little bit odd in that regard. But it is harder in the American sports, obviously, because it's harder to build a dynasty. I mean, we've been really good for the first 8 years of our existence, or at least 7 of the 8 years of our existence. But every year we're in a position where we have to reinvent ourselves because we're operating under this extraordinarily tight salary cap. The irony of that is that many of my friends who own teams in the Premier League or in France or in Spain or Italy complain about the fact that they don't have a salary cap. Because the spending in those countries is unrestricted, and when a big stack bully comes to the poker table in one of those countries with oil money or oligarch money out of Russia or whatever, they can tilt the table to such a degree that it can make it unprofitable for a lot of the people who are trying to run reasonable businesses in those territories. And so in some ways I'm quite grateful for the American socialism around soccer, but the flip side of that is that it does limit the product that we can put on the field, because the Miami had to do backbends to bring Messi into the league. Beckham before that at the Galaxy. It required all kinds of equity participation and other things that are unusual in global sports. A part of me wishes that we could be a little bit more unrestricted, and those negotiations happen at the league office every year between some of the more aggressive clubs like us and some of our peers, and some of the clubs that are kind of hoping that the rising tide floats all the boats.
Right. And Carolyn, for the NWSL, clearly in high growth mode, how do you balance profitability or path to profitability with investing in the business?
Yeah, so I've been on the NWSL board for probably a year and a half, and I think I'm one of the most seasoned members now on that board, which speaks to just the turnover of ownership in the NWSL over the last few years. I think in the past, it was probably a board that was more focused on current profitability and not really investing for growth, and now you very much have a group of like-minded investors that are looking for it to grow and raising the bar of what success looks like. I was just yesterday sitting with our team at Gotham, and we were rewriting our mission statement, because the previous mission statement was some version of we want to be the best women's soccer team in the world, probably with more flowery language than that. But we all sat around and said, we don't want to be the best women's soccer team in the world. We want to be one of the best teams in the world, period. And that is the type of ambition that is now in the NWSL. And that's a very different mindset than it used to have.
Got it, thank you. And then George, lastly for you, your investment focus is a little bit different, cash flowing, kind of ecosystem type of companies, services, businesses around sports. When you're looking at investment opportunities, what do you look for in the financial profile of your businesses?
Yeah, some more high cash flow, low capex, high cash conversion in a segment that is going to have real growth behind it. So we typically invest in companies that earn at least $10 million of earnings, and the idea is to try and grow them to 50. And so you got to be able to have the growth potential, and what are the levers that are out there to grow it, and do we think we can impact the outcome? That's kind of our approach.
Great.
I think it's partly why it's been so tough for venture, actually, in sports, because a lot of times those businesses that do serve the leagues or the teams, et cetera, and that are the picks and shovels companies that you talked about earlier, are kind of cash flow businesses with good, but not like the kind of explosive growth that we see in, my firm sort of funded the social media explosion, and don't throw things at me. We did Instagram, Twitter, Snapchat, a bunch of these, Discord, one after the other, as early stage investors, and those are the kinds of things that go from like $1 million to $100 million overnight, basically, and that doesn't really happen in a lot of these pick and shovels businesses in sports. You have customer concentration, the sales motion can be very seasonal. There's all kinds of things that make it a little bit difficult for traditional venture, but I think it's been very amenable to private equity.
Yeah, growth capital, private equity, lower middle market. It was not by design, it was by total accident. We started importing companies to America, so when you have a company that's making 10 million, and you can bring them to a new market and open up all these other clients, it's a real value add. And we now take American companies to Europe, Europe to America and Australia, and that, because really just doing what we do in the United States probably would be too small. Yep. There aren't enough good opportunities, but with a global view, there are plenty of good opportunities.
So in sports, capital markets, increasing amount of creativity around different financial structures. You have the leagues who are opening up to, or have already opened up to, private equity. And you have insurance companies that are now playing, private credit companies that are playing in the world of sport. So George, what do you see as kind of the next evolution of the private markets for sport?
So if you take a step back, sports has been primarily driven by family businesses. Most sports have low debt levels, and so they've been kind of conservative, and then have benefited by enormous raise in media rights and really a scarcity of asset, and it's driven enormous value. It's also created a capital structure that's pretty basic and is ripe for a little disruption. And so I think what you've seen now is capital coming into sports, some of it which is good, meaning I think what we do, we're building companies, it's good, creating jobs, whatever. And I'm not saying we're the only ones, but there are good parts to it. But the game has been changed. I think when you look at professional golf, that was a sport that was a global sport, run with a regional focus, that was disrupted by somebody that had a global focus and an unlimited supply of capital. And I think that changes sports forever. So if you're running a league or a team, you need to have a capital plan for two reasons. One, how do I differentiate myself from my competitors? And two, what do I need to do defensively? And an example of this, I said it a year or so ago on CNBC, basketball is a global game. A third of the players are outside the United States. It's ripe for disruption. Well, there's a new league being backed by some significant sovereign wealth funds starting in Asia, but that will compete for players. And so, I go back, it's related to Americans because we're an American audience. There was a great American company called Anheuser-Busch, and it was run by an American family that had no interest in the rest of the world. The problem with that is beer is a global business, and they were bought by a company from Brazil, and the rest is history. So that's an example of, hey, capital now is coming to sports in different ways. And if you're going to be in the business, you need to have a capital plan. How do you use capital to build your business and create a differentiation? And then defensively, what do you do? And you're going to see more and more of that, I think, going forward. I think the dam has busted there. The other last thing I'll just say is, you'll see more and more debt products. Some of these deals that look like private equity really aren't private equity. They're longer dated, 15-year funds with 12 to 15% IRRs. But you don't need a 15% cost of capital. You're going to look at lower cost of capital. So insurance companies that have, 3% cost of capital are going to start competing for some of these bigger deals because the bigger leagues are going to realize they don't need to pay that cost of capital. So I think you're going to see a different level of sophistication. I think you're going to see a lot more structured equity going forward, and I think it's going to be changed forever.
Capital alone doesn't always win. I mean, you look at what happened in Saudi Arabia in football, right, or in soccer. They came to the table with just massive, massive sums of money and bought, most of the great European stars and brought them into their sort of nascent league. Cristiano Ronaldo among them, one of the the most famous celebrities on planet Earth. And it didn't really help. I mean, they were getting 5,000 people to the games. The TV deal isn't real. I mean, nobody's really watching it on TV. It's like, it's kind of a bit of a failed experiment. And had literally an unlimited budget and all the star power you could imagine.
But if you have any business with a bad idea and a lot of capital, it doesn't matter. But if you have a good idea with a lot of capital, that's when it can be disruptive. And golf is global. There's a global demand for golf around the world, and it's run regionally by people that are undercapitalized. You're open for disruption. So it has to be a good idea, right?
So one more question, and then we'll get into audience questions. If you had one bet to make in sports, where do you see the most growth and opportunity across leagues, teams, or the ecosystem of companies around sport?
Happy to start. So, as I said at the beginning, we started Next3 to be at the forefront of where sports was going and to be at that intersection of, sports, media, entertainment, and where the status quo will be disrupted. And so I think you mentioned about the idea of the importance of the fan experience. And if you think about what it means to be a fan today, whether you are someone that is going to, 30 games a year and you're spending a lot of money with the team, or you're someone who is a diehard fan, but you never will walk into that stadium and you're just consuming it all online. You watch every game on TV or you don't. That fandom looks really different. And, excuse me. And the idea of a team being able to differentiate between those fans is something that will be critical to team success in the future. So we are very much thinking about what that looks like and who are the right people to back in that space.
I'm kind of concerned longer term about just the sort of staleness of the product as a television experience, right? I think it's been true in almost every sport except perhaps the NFL that viewership is declining. Younger people want a different kind of experience of sport than sitting through a 4-hour baseball game or an NBA game where it doesn't really get fun until the last 15 minutes or whatever. And so I think there's an enormous amount of opportunity for innovation around the product, the media consumed product, and that's one area that I'm spending a lot of time thinking about.
For us, we've kind of stuck with investing in the change in how content is consumed and investing in the one-to-one relationship with the consumer. Technology is disrupting everything in life. Sports is no different, and there's been a lot of good opportunities. I also have to say that, women's sports is stickier today than it's ever been. When you look at the Women's World Cup, when you look at the Women's EuroLeague, when you look at the progress of the NWSL, when you look at women's hockey, when you look at women's basketball, there are things going on there that weren't going on 10 years ago. And so I think that's an interesting area. Obviously, it's going to be a lot of investment. But look, if you bought a women's franchise 5 years ago, you'd be feeling pretty good right now, right? And so, but it's not just in the U.S. It's all around the world. Wembley Stadium selling out for women's soccer. So there's something going on in the women's game that just wasn't there years ago.
Good question here from someone in the audience. How do athletes investing in companies and in teams change the dynamic of investing in sports? Is that something that the three of you have been able to leverage as kind of an asset in your businesses, or where do you see the opportunity with athletes as investors?
I mean, it's been happening for a long time in Silicon Valley. I don't think it's been entirely successful. There's some really smart athletes, or at least athletes with very smart representation, who are able to get into reasonably good deals and lend their name in a way that helps. Because that's a real asset often to a startup to get PR, to get sort of organic distribution. And so that's happened, and that's been happening, going back 20 years. I don't think it's really that meaningful, frankly. And I think that athletes could do more if they were a little bit more organized about it, and if they sort of were able to pool resources in an interesting way. But I think just a lot of it is driven by agents and a lot of or business managers who often are not the most sophisticated investors, let's say. And it hasn't, in my experience, been all that meaningful, at least in the niche of investing that I operate in.
Yeah, the only other thing I would add is I do think from a brand perspective, there is an expectation that an athlete, if they're going to endorse a product, do something with the team, is going to probably get paid in equity. Whereas I think, if I go back to my early marketing days, it was sort of you'd say, okay, I work for Gatorade, can you be the spokesperson? Here's a check, the end. Now it's, I want equity, I want to be part of the upside, which is great because there is a much more, in a world of so much content, there is a much more authentic relationship with an athlete being an investor, but it's raising the bar. They're not just going to, endorse any random thing. So I think from the team perspective, I agree. I don't think it's materially impacted that. I think from a brand perspective, it has definitely raised the bar of what the expectation is. Great.
Well, I think with that, we are wrapped up on time. So thank you very much to the panelists and for everybody in the room joining us.
Thank you.
Thank you. All right.